Hello, and thank you for tuning into my channel again. My name is Amit, and as always, it is a pleasure bringing you another YouTube channel. Alright, today's topic is very unique. This one I don't think I have ever covered it, and so far I don't think anyone else have covered it. It's basically a tool that you can buy to look into stock market. The website name is simply safedividend.com. Spelling is this here. So let me put it on notepad just in case if you don't know. So that's right here. Okay. This is the website name, simply safedividend.com. So when you first go into this website, you actually can sign up for free trial. I literally just signed up and I have 16 days before I have to pay them, which is nice because this gives me enough time to evaluate, right, and gives me enough time to bring it to you guys. And I might buy it, I might not, but I just wanted to kind of show you guys how you can do your own review or do analysis. So stock market, right, is very tricky, and the quality of the research that you get is basically dependent on types of information you have available. And if you don't have anywhere like a combined one place go getting the information, it's very hard trying to go there. So what I mean is, like, for example, let's look at one stock very quickly and see what information we can find, and then we'll do a reverse engineer in it. Let's look at XOM, which is Exxon Mobil. Okay, this is, if you were to look at Exxon Mobil in any other site, right, XOM right here, Google gives you a little bit information, then you get a whole bunch of other information where all of these information basically is like all over the place. You want a website that you can quickly dive in and make a decision. So I've seen this, a lot of other YouTuber people use it, but they don't really cover that how they use it. And my intention is to show you guys that, look, how are you can use it to your own advantage rather than relying on somebody else's research. You can actually use this tool to research the stocks you might be interested in and hopefully buy that stock and hold it for long term. Okay, so here's they are currently listed in NYSE, ticker symbol XOM, Exxon Mobil. Currently they are giving 9.11% dividend yield. This is crazy. You know, it's almost close to 10% if you own them. You know, this, I am gonna start owning them because I simply want this 10%. I am in borderline of between growth and dividend. Now, if somebody gives me this huge of dividend, obviously I want to own it. Now let's look at other factor. Maybe I might change my mind, right? Right now they have dividend safety score of 55, dividend growth of 6% last year average. Okay, let's go back. Hello, where did you go? Excellent. Okay, their market cap up 1.65 billion, and their mega cap, right, volatility, they're a high volatility stock, 1.15. The current price is $38.18. Okay, let's look at what other information that you need as an investor to make sense out of this. They give you a little information regarding this website, this stock. Exxon borderline safe rating suggests that the company appears to be moderate risk, dividend cut over full economic cycle. So they might cut their dividend. be reaffirmed Exxon borderline safety rating August 16, 2020. So less than a month right now, following the company's second quarterly earnings release. Okay, we'll come back to this research. Payout ratio. Right now, their payout ratio is 378%. Very high for oil producer. Literally, they're telling you right here. You don't need to go look at somebody else, okay? Analysts and people who's does this for living that they're getting, that they're telling you, look, this is very high, right? Forward PE ratio, this is very high for oil producer again, 381%. Net EBITDA. ED, high for oil. I think that's how you say it, EBITDA. But edding, I don't know how you say this one, but yeah, high again. Low for oil producer. Net debt to capital. Okay, this is low. Dividend streak, 37 years strong without a reduction. Very important. If you were looking at aristocrat, 37, right? Most people, they look at for 25 year, I believe, or more. So they kind of passed that, but there's two red line right here. Recession dividend increased during 2007 and 2008. So what happened during 2007 and 2009? Right, we had that recession where the mortgage was that bubble busting, right? Recession sale, 40%, 40.9, so 41% average growth. That's a minus, not growth, meaning they lost 40%, 41% of their below average growth during that time. Recession return, 28% down at that recession in 2007 and 2009. Last year, 6% dividend growth. Last 5 years, 5% per year average. 20 years, right? Look at this. This is crazy, guys. This much of data that they're plotting right here. Like literally, you can look at right now, $3, more than $3 annual dividend per share. Dividend growth streak, 37 years. Uninterrupted dividend plus 37 years. Quarterly earning, annual payout is $3.48. Ex-dividend August 12th. So I should actually get some dividend. I think I actually own 5 shares of this. It's full disclosure, okay? And they're currently giving us 87 cents per share. So let's calculate quickly. Times 5. I am going to get $4.35, okay? Current dividend yield of 9.11 is 129% above its 5-year average 3.97. Okay, they pay you around 3.97, which suggests that the stock could be attractively valued if the dividend is safe. However, Exxon forward P is 41. It's above, right? 5-year indicates that stock looks somewhat expensive compared to what the market has valued in the recent year. Right? At this point, you do not need somebody explaining to you what am I looking at. This is very simple. You can do your own research. Okay, that's kind of my goal, is to kind of give you guys a tool where you can make your own decision, and hopefully I can learn from you guys if you make your own YouTube channel. And I love learning. I enjoy learning. I that's how I learn, get more topics. So this is one way I'm sharing. Hopefully somebody else will share theirs. All right, let's get back. Dividend yield right here. Look at this current yield. Forward P right here. Okay, 52-week price range, right? They were $31 lowest. The highest was $73. Energy. Earning payout ratio. Look at this. 375%. What do you think this means? Okay, let's look at this. Percentage of earning paid out as a dividend for oil producer. We prefer to see payout ratio below 40%. Okay, this is the key, guys, for dividend paying stocks. The earnings are tied to price of oil and gas, causing their payout ratio to fluctuate significantly. A temporarily weak payout ratio may be an issue if the firm is otherwise healthy. What does this mean, guys? Tell me. 378%. In my opinion, this is what it means. Company cannot sustain this, okay? Because right now they're paying 375% more than what they're getting in terms of money. So they will more or less likely to have to cut their stock. Their dividend, the streak that they're going. So future is more likely we're gonna see that. I believe so. Free cash flow payout ratio. Look at this. They're going in negative to just pay us. Percentage of free cash flow paid out as a dividend for oil producing. We prefer to see payout ratio below 40%. Unlike earning, free cash flow measures the amount of cash from generate after reinvesting. It could be volatile, but the safest company regularly cover their dividend with free cash flow. Look at this. They don't have free cash flow. It's going down, whereas up. So earning per share, right, or just earning used to exclusively one time, free cash flow going down. Earn per share growth, sale growth, everything is down. Share outstanding in billions, total sale. Okay, let's look at this dividend safety thing. Exxon dividend hinges on oil rebound and management tolerance of higher leverage. Okay, that was in May 29, 2020. Exxon reduces spending, reaffirms commitment to dividend. Look at this. That was in April 7, 2020. Oil price shocks expected to pressure Exxon's spending plan. Alright, guys, let's look at this. None of the oil major can cover their capital spending and dividend at today's oil price, even after slashing their investment plan. Oil needs to be closer to $50 to $60 per barrel for these companies to break even on their obligation. What does this mean, this break even? Break even means, right, you as a business, you have this much operating expenses and this much you sell and this much you have to sell to kind of stay even before you go either negative or positive, right? If you go positive, then that's your profit. If you go negative, that means you can essentially be bankrupt. Same thing happens like when we go borrow from, like, you get paycheck and you spend more than you have, right? You could break even, just spend the same amount you get, but if you spend more, then you owe somebody money, versus if you get credit versus you save some money, that means you have profit in a way. All right. So here's their stock. It's very nicely done. I am very impressed. I haven't been using this website yet. I would highly recommend you guys looking at it. It is a bit pricey. You can look at the subscribe now yearly for $400. This is why I try to stay away, but I am kind of starting to get in more in stocks. Therefore, I think I might actually need this. Look at this. They have done more other. Let's look at another one. Let's look at IBM. It's interesting company. I always like them. They have 65 safety dividend. Let's look at Walmart. What do you think is Walmart? Do we not have Walmart? One second, guys. I think I need these. Stock symbol is WMT for Walmart. Their dividend safety is 78. Let's look at one or two more. Let's look at Apple. Yeah, A E L. They have 99. Look at this. This is crazy, guys, to get this high. I don't think anybody gets 100 on this side. 99 is the highest they ever give out. But dividend yield 0.73. Okay, price $112 right now. They're $2 trillion company. I think Microsoft is also there. MSF. No, hold on. MSFT. Let's look at that. $99. They are $1.62 trillion, guys. $220 right now their stock. Let's look at one more. I really wanted to see Tesla. This and Tesla's is TSLA. They haven't covered that yet because why? That's because they are not a dividend paying company yet. Therefore, they don't get any score. Okay, only the dividend paying companies get that. Let's look at Visa. You guys, they got 99. So basically, you use these information to buy very solid fundamental companies. So I recently just came across somebody asked me, somebody's very close, well, not close to me, but like the kind of extended family. They asked me this question of, hey, I have some money, what do I do? And this person is not very financially independent, I would say. Well, she has money, but she doesn't know how to research, right? She doesn't know what to look for. And if you haven't been following the stock market, right, and you don't know what to look for, you want something easy way to basically understand and what things to look for. So website or tools like this, Simply Dividend, if you can find something that gives you 99, right, these are blue chip stock and you only invest in these companies, you're more likely to not lose money and more likely to gain money, right? If your losses will be very minimum, because I'm pretty sure Visa probably lost money during this pandemic, but it wasn't yeah, there you go, they did last, actually they didn't. Let's look at it. Yeah, they did, but look at, they came back almost. So right now they're 213. They actually even more now, from 201 to 216, right? This is the entire concept of if you're afraid that you're going to lose your money and you don't know what to do, so maybe you should invest this kind of tool and only invest in companies that the research has been done and you can actually read and really understand why they're getting the score that is, and you need to be okay with it. Okay, and you can also actually build your own portfolio. You can add. So I can enter my holding. I have XOM, right, Exxon, and I have 5, and I can even do cost per share. That's 1 second. Let me just get that for you guys. That's in my app. I use this this app called SoFi. It's very interesting. I did a review, so if you guys like, you can go ahead and watch that video. But I'll tell you my cost basis for my XON. Okay, was it here or somewhere else? Oh, that's Coca-Cola. Okay, so let's take this one out. I'm sorry guys, that was KO. I'm pretty sure I bought somewhere. So I bought 2.15571, and cost share was $49.81. Okay, that's how much I paid them. Actually, hold on. my investment average cost. Actually, that's not my average cost was $47.14 average cost. There you go. And then let me look at my Robinhood real quick. I'm gonna try to build my trap portfolio out, guys, so you guys can see what's going on in my own. And okay, do I have Exxon? Yes. So apparently I bought it in my Robinhood. So Exxon here I have 12.5, and cost per share was, average cost was $43.82. All right, add the holdings. All right, so let's look at this. It goes in and very easily right now it goes in and does its magic and gives me, look, your balance performance $298 down right at this moment. My dividend growth last 5 years is gonna be 5%, but technically I didn't own like this part of it. My diversification, consumer and energy, and dividend evaluation 7%, right? 80%, 55%. This is amazing. Like, but yes, the tool is expensive, but if you're using this tool for your advantage and you have a little bit money that you're not trying to lose, right, I would highly suggest that use some tool like this. It will help you a lot. All right, guys, let me know what you guys think. And just one more thing, if you can hit like, subscribe, and leave some kind of comment, right? I am not a fake person, neither do I try to sell anything. I don't believe in selling course for money. I kind of just want to build an audience, and I just want to share free knowledge. I am a student. I have a master's degree, and I'm doing my currently second master's, and I believe that we need a free information share platform. That is why I make these videos, and something that I'm passionate about, although this has not to do that much with my major. I'm a IT major, so I don't like mixing my work with my hobbies. This is more like hobby, and for making money, I don't want to, there are a lot of scam, so stay away from those. So that's not my goal, and my goal is to kind of give you free and honest advice, and hopefully I learn from you guys. I am trying to better myself basically in teaching, and what's the better way to better yourself is you have to teach somebody. It doesn't matter even that's one person. Alright, guys, thank you very much. Have a good night.